Right now, somewhere in the world, someone is standing outside a convenience store in the rain, staring at their phone, watching their available balance sit at -$4. And at the exact same moment, 2 blocks away, someone else is picking up a phone call from a private banker who already knows what school their kid starts next month. Same bank, same logo, same mobile app. But they are not being treated by the same company. Not even close. By the end of this video, you're going to know exactly which version of that bank you've been getting your entire life. And more importantly, the one thing almost nobody does that quietly changes it. Let's start at the bottom, because this is where most people begin, and where a shocking number of people stay far longer than they should. Not because of bad decisions, but because of a system that was never built to move them up. When your balance drops below zero, the bank doesn't see a person anymore. It sees a risk score. That's it. You get hit with an overdraft fee. And in 2024, banks and credit unions in the United States collected over $12 billion from those fees alone. JP Morgan Chase and Wells Fargo each made over $1 billion from overdraft fees in a single year. One bank, one fee, $1 billion. And here's the part that should genuinely make you angry. That fee isn't evenly spread across everyone. Research shows it falls disproportionately on lower-income households and on families who can least afford to lose $35 for being $4 short. Only about 7% of accounts overdraft 10 or more times a year, but that small group generates roughly 75% of all the fee revenue collected. You are not falling through the cracks of the system. You are the business model the system was built around. In 2024, regulators actually tried to cap these fees at $5. It would have saved households an estimated $5 billion a year. But in 2025, that rule was reversed, which tells you something important before we go any further. This ladder we're about to climb isn't natural. It's not random. Every single rule on it was written by someone, and it can be rewritten, but only if you know it exists. So stay with me, because there's a number coming up in about 60 seconds that changes absolutely everything about how a bank treats you, and almost nobody watching this knows what it is. Once your balance creeps upward, past a few thousand, then tens of thousands, something starts shifting quietly behind the scenes. You will not notice it happening in real time. There's no email, no notification, but somewhere around $150,000 sitting with one bank, an algorithm flags your account. Not because a human reviewed it personally, because a number crossed a threshold that was set years ago in a spreadsheet you will never see and were never meant to see. And once that flag goes up, an entirely different version of the bank opens up to you. You get a name, a real one, attached to a real person. A dedicated banker who picks up in 3 rings instead of 45 minutes of hold music and a robotic voice reading you a menu. Fees that mysteriously get waived before you even open your mouth to ask. This is what's called private banking, and different institutions set the entry point differently. Some as low as $150,000, others closer to $750,000 for their more exclusive tiers. But here's the twist inside the twist. The bank is not doing this to be generous. They are doing it because they are scared. Scared that if they don't treat you differently, you will walk across the street and hand your money to a competitor instead. For the first time on this ladder, the relationship flips just slightly. The bank needs you a little more than you need them. Now here's where it gets almost unbelievable, and where most people's imagination of rich people banking completely falls apart. Because the reality is stranger than the stereotype. Keep climbing. 7 figures, then 8. Somewhere around $10 million at major institutions, the entire relationship doesn't just shift. It inverts completely. You stop following the bank's rules. The bank starts building its rules around you. Interest rates aren't fixed line items anymore. They're conversations. Loan terms get custom structured around your business, your assets, your timeline. Instead of you squeezing your life into a form the bank designed for someone else. At this level, you are not a customer being served. You are a liability the bank cannot afford to lose, and every private banker on your account knows it. But there is one level above even that, and almost nobody watching this has ever seen what it actually looks like from the inside, because it isn't designed to be seen. Past $25 million, the branch disappears completely. There's no lobby to walk into, no queue, no hold music that could ever possibly exist in the first place because you never call a general number. You call one person, and that person already knows the answer before you finish the question. Instead, there is a private team built entirely around a single individual. Tax specialists, estate attorneys, investment strategists, insurance architects, all coordinating quietly in the background before a problem even becomes a problem. This is called a family office. It manages everything from generational wealth transfer to philanthropic structuring. And it is not something you apply for. It is something you get invited into. And here's a detail that tends to surprise people. This isn't some fringe, rare thing reserved for a handful of billionaires in movies. Family offices manage trillions of dollars globally today, and the number of them has been growing steadily for years because more and more wealth is being created that needs this kind of quiet, coordinated management. It's not rare, it's just invisible to almost everyone below it. So here's the twist almost nobody catches, and it's the entire reason this video exists. This whole ladder, from -$4 to 25 million and beyond, was never really about the money itself. It was about leverage. Every single tier up isn't a reward handed out for being wealthy. It's the bank protecting itself from the possibility of losing you, which means the leverage powering this entire system isn't reserved for millionaires. It exists on every rung of this ladder right now, including yours. Today, whatever your balance says. Most people simply never learn how to use it because the entire system is quietly built to make sure you never ask the question in the first place. So before this video ends, here's what you actually do with that. Ask your bank to waive a fee before you accept it. Most people don't realize how often this simply works because the cost of losing you is usually higher than the cost of the fee itself. Ask what balance unlocks the next tier at your bank specifically. Most tellers will not volunteer that number, but they will answer directly if you ask directly. Try it, and you'll be surprised how often the conversation shifts the moment you do. Negotiate your savings rate the exact same way you would negotiate a salary, because at every single bank, that number is far more flexible than the one printed on their website. Because here is the truth sitting underneath everything we just covered. The bank was never designed to look out for you first. It was designed, from the very bottom rung to the very top, to keep you exactly where you currently are, unless you ask for something different. So the real question isn't which rung of this ladder you're standing on right now. It's whether you've ever actually asked to move up. Thanks for watching, and please don't forget to subscribe.